What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 26th of 2018. Well, folks, I hope you all are having a wonderful day today, and as always, we've got a lot of interesting things to talk about here on the Daily Update. First and foremost, we're going to be taking a look at market valuations as well as doing some technical analysis on the market leaders. But outside of this as well, we've got a bunch of headlines to dive into. For crypto, we have Circle, the well-known Goldman Sachs-backed financial company, going about creating a fiat or dollar-based cryptocurrency, and along with that as well, Bitmain filing its official listing for its IPO. But in regards to traditional markets, we really have our sights on the FOMC, the Federal Open Market Committee, meeting today later on to discuss interest rate hikes and what that means for overall equities. So outside of this, guys, we've got a lot of other topics to discuss. Let's not push it off any longer and dive right into the video. One thing I'd like to add though as well, I'm testing out a new lighting configuration. Let me know what you all think. I'm trying to improve a little bit on the studio. I know some of you have been asking, you guys want some background details, and I'm going to be doing that once I move. I'm going to get a whole studio built out, so patience is key in that case. I appreciate you all waiting. So let's go ahead and dive into the analysis on the market. So for the most part, guys, across the board, we have a few altcoins up, but for the most part, it's mostly XRP, and I would say a little bit of attraction here with other similar players like Stellar, for example, but really the hype is around XRP right now. The jump in volume we're seeing in the market, the really extra additional $2 billion in volume that we're seeing in this market has really come in due to XRP. Okay, so we're going to be talking about that later on, talking about the potential trade that there might be. Again, not advice in any regard, but again, I'm just keeping open to the idea that we could see XRP do quite well going into the Swell conference that's coming up in early October. So we'll talk about that a little bit more later on. But for the most part, markets are roughly in the green, but gains are mostly being made in a few select players with a few down in the red. So markets overall optimistic. I think we've generally added about $10 billion in market cap over the past few hours, but I'm really not concerned so much about these. Again, $10 billion in this market, guys, is quite small. What we need to focus on here is, again, how we're stepping towards what I talked about a week ago in regards to the calm before the storm. We are still in this brewing calm before we really make a massive move either to the upside or the downside. We've been building this long-term wedge, and I'm hoping that no matter what happens, we're going to get some serious volume in this market, that we're going to get some serious volatility coming back in. Volatility in Bitcoin has been minimal. It hasn't been this low. I think there was a recent article I read since back in 2016. We have not seen Bitcoin's price stay so stagnant within a specific amount of time. And again, volume's been relatively stagnant as well. We've been sitting well above 10 billion, between 10 to 15 billion, generally speaking, over the past few weeks. So expect that in the next week or so, as we step towards October, and we'll take a look at the chart later on, that we're going to see some serious moves. Going on here to Bitcoin dominance, this is also being a very clear signal that we're probably going to be seeing something here in the next week as we approach previous levels back in November and December for Bitcoin dominance, and we're starting to see some sharp declines here in Bitcoin dominance, even though most of it is going obviously towards Ripple and a slight recovery in Ethereum. The fact of the matter is that we have to understand that this is showing that the market is taking more risk on some altcoins in the market, which again are holding higher risk levels comparative to Bitcoin due to higher gains, but also higher losses. And along with that as well, just generally admiring the fact that other coins are at quite a decent discount right now. So if we can start to see some of the momentum plays, which are plays like Ripple or Verge or Tron, again, players that have very, very fast movement in these types of markets where we start taking more of a bullish tone, when we're starting to see these front runners really start to make moves, it wouldn't be too hard to think that we could really get a kickstart here going into October where altcoins feel a little bit of love as well. Again, we saw back in April, some altcoins doubled or tripled off of the lows that they had before we really started that kind of short-term rally. And again, if Bitcoin starts to pick up here, altcoins can move just as quick. So we want to keep open to that idea. I think at this point, again, it would be kind of foolish to get bearish on altcoins at some of the lows that they're building, and not to mention some of the bases that they're really forming. And we'll take a look at some of them later on. Going on here, again, the focus here is Bitcoin, and as we've talked about, guys, we are still in a neutral trend at the moment. We're still kind of in the twilight zone. We have not picked a trend just yet. And again, don't fight it. Don't try to trade this market right now. At least in my opinion, guys, I'm not trying to trade this market. I'm stacking up on positions and stuff that I think will do well if the markets move higher. And I've got the safety protection, the stops set if the market starts to dip below 6,000. But at the moment, I'm waiting patiently. I'm not trying to trade on the daily in this market. I'm building positions that I feel are valuable until we pass the three barriers here: the 50, 100 day, the line of resistance that we've had for Bitcoin, and the 200 day. I consider the 50 and 100 day generally one indicator. In this case, they've been holding a general price range here against Bitcoin. Once we pass these, once we pass the line of resistance and the 200 day, I feel like that's going to be a pretty steady confirmation that markets are ready for at least a nice short-term rally where we could see altcoins carrying as well. And that could be carried by not just Bitcoin, it could be carried by Ethereum making steady rebounds, or Ripple with the Swell conference, XRP making some serious gains. Again, guys, we have to keep open to this. The big thing I'd say here to watch, and many people were actually asking about this. This is an indicator I'm thinking about doing a video on in the future, the squeeze momentum indicator. This is a really cool indicator that kind of can show you the shift in the squeeze towards investor sentiment in the market. And we can see it basically, if you take a look here, as we go into the green here, you want to be worried when momentum is dying off in the market. And along with that as well, you want to get eager for cryptocurrencies or different assets, depending on what you're using this index for, when you start to see momentum to the downside breaking off. So we can see that the red is starting to dilute here. We're starting to get back here towards a neutral level, and potentially where we could see a shift on the weekly towards more optimistic price levels. So keep an eye on this here, guys. Keep an eye on the squeeze momentum indicator. It's another indicator you can get built right into TradingView by I think it was a custom user who made it, but it's a really, really fascinating indicator. I like using it. The big thing here, though, we want to look for a spike on volume this week. We want to see some interest come back into this market. And again, RSI in the weekly relatively low as well. So again, Bitcoin is looking, in my opinion, so long as you can get past these levels here, it's looking more optimistic than bearish. Again, we've been holding 6K quite steady for the past few months, all the way back in February. It looks like Bitcoin's, at least in the short term, built a steady base and is looking for higher levels. Let's go on here to talk about Ethereum. Ethereum is still on my crosshairs at the moment. I think everyone's been talking about Ripple, but I wouldn't doubt that we could see some optimism come in from Ethereum here. Again, Ethereum futures contracts could potentially be coming around by the end of this year. We don't have an official confirmation, but it could be very, very likely. I think you're going to get Ethereum futures contracts before you get a Bitcoin ETF. And if that's the case, that could bring in some serious institutional interest here, as I think enterprise, institutional finance wants to get some exposure to some of the enterprise side of blockchain, seeing as there's not too many options on the open market right now. We've seen some of the pandemonium, if you guys have been keeping up with what's going on, and some of the weed stocks, and what originally happened when some companies just simply added blockchain to their name. The amount of fanaticism that came around in investing in these. So again, futures contracts could be very well, especially in a bear market. We haven't seen that. We saw futures contracts at the peak of a bull market for Bitcoin, and it will be very, very different, I think, with Ethereum down at these prices. So again, not too much I can do on the TA side of things. The USD is making me worried that we might see a double bottom in the market before we really get a rally higher, and that's okay. That's fine with me. That doesn't mean it has to go down that much, and it could solidify longer term support here. So in this case, no serious TA. Would like to see this get above the 50-day moving average before I really get confident. And let's go ahead here and really talk about what people are really excited about, and that is XRP. XRP did exactly what I was hoping it would do the other day for a potential continuation of the trade. It held on the 200-day. It did exactly what it needed to do. We can take a look here on the hourly. This is holding quite nice. It held above the 200-hour, is getting back towards this median of price range here. And if you really get a breakout and close above, I would say, this general level here around 90,000 Satoshis, this is going to continue to probably rally going in towards swell. Again, I think this is going to be, as always, buy the hype, sell the news, and I think more than anything, if you are going to trade XRP, again, it's not an actual recommendation, guys. I know that I'm going to potentially build a position beforehand. If I get that breakout above 90,000, that's when I'm going to probably enter. And I'm going to ride the wave of optimism. And, maybe into swell, things might go well. They might be very swell. So what I'm going to probably do is raise my stop just in case if it is a sell-off of the hype, and XRP might be overextended at that point. And then from there, if it continues to rally, I'll let it run. I'm not going to just sell it right before the swell conference. So we'll have to see what happens. Again, I'm definitely keeping an eye on a trade here. I haven't engaged in it yet, but I am definitely looking at XRP. And not only XRP, I'm looking at momentum plays. I'm looking at not only the currency plays that I've talked about. I talked about Dash, NANO, as well as Monero. I think all of those are play into this equation here. We'll take a look here at NANO here on the chart. We can see this generally breaking above this line of resistance here, holding well on the 150-day. Volume still remaining quite nice at these price levels. So this is looking good. But I'm not only looking at Nano and Dash and a few others. I'm also looking at some plays that I fundamentally don't really like, but I think could do very, very well. What are some of those plays? One that I've given plenty of crap to and I think has received enough crap in the past, Verge here is looking quite nice. It's looking like what it failed to do back over here, which was make the 50-day support, is now acting as support here. And again, the key thing to look at, guys, for a lot of these altcoins, and I'll go ahead and bring this to a chart where we can really get some price history. Take a look here on Bittrex. Look at what Verge is doing here in its Bitcoin comparative. It's making support at a previous resistance. This is something I've been talking about watching for a while on Verge. Look at how it's building that support and how on the weekly momentum is starting to shift from being bearish to potentially becoming bullish over the next few weeks. If we get a serious breakout here like we did in April, for a week or so, the momentum is going to seriously shift here. The RSI on the weekly, very oversold. It's back towards this median level here. We haven't seen this in quite some time. So again, keep an eye on some of these momentum plays, whether you like it fundamentally or not, guys. If you're traders, you want to trade momentum plays. And I'll go ahead and pull up Tron here as well. Again, not much TA really needed. Sorry, let me get this on Binance. There we go. So we can see here, again, I don't really like Tron, but take a look at where it is and where we had the last rebound back here in March towards April. Again, we're back towards this level again. Could we see a repeat at least up to this line of resistance and maybe even a break higher? We very well could if Ripple continues to carry momentum. If Ripple serves as a catalyst as well as maybe Ethereum, and we start getting a domino effect in this market, a bit of FOMO coming back in, that crypto could possibly see these kind of rallies. Again, markets aren't always rational. Markets sometimes steer away from fundamentals. We've been in a market where fundamentals have been applied quite well, and we've been feeling a little bit of bearishness because we haven't seen real full-scale adoption. But don't doubt, guys, that markets can be irrational sometimes and really spike up out of nowhere. But again, big thing I would say to focus on, guys, as well, whether you like Ripple or not. I mean, if there's some big announcement that would bring utility or value to the XRP token, I think it could very well carry the rest of the market. And again, we could still see a potential trade higher on Ripple. So keep an eye on that, guys. I think that's the big thing here, October 1st and 2nd. It's being hosted in San Francisco. So anyways, let's go ahead and talk about some of the big news headlines here. Circle has announced that they're going to be launching a stable USD coin. Again, there's been a whole gold rush, I think, at this moment for a lot of companies. Not only just to keep and maintain people on their exchanges, but along with that as well, to just kind of tap into this market of making a fiat-backed cryptocurrency. Ever since the fears of Tether have arisen, we've seen True USD, we've seen the Winklevoss's stable USD coin come out, as well as Circle diving into this space. So I think it's just providing a plethora of entries for liquidity, and I think this is very important, not only to have fiat gateways, but to have something that's going to, again, provide opportunities for people to easily trade between cryptocurrencies and something that can retain the dollar value that these investors and traders might want to keep their wealth in between trading cryptocurrencies. And this is, again, important. We want these markets to be liquid. We want it to be easy for people to exchange fiat for cryptocurrencies. So I think this is really good to see. There's not too much details. This was recently published out on Bloomberg. If any details come up, I'll let you guys know, but I think the important detail is where this is going to be trading. We can already know, obviously, that this is going to be trading on Poloniex, which I think Poloniex is going to get a big revamp over time if they keep on making really steady developments on. Right now, Poloniex is kind of dead. No one's really trading on it. It's got a lot of older altcoins on it, but if Circle starts to pick up things, Poloniex will be interesting to watch. But this is also going to be on Huobi, OKCoin, KuCoin. So on a variety of some of the Asian exchanges, but also in some exchanges that retail traders trade on in the US, like KuCoin, as well as potentially on a digital wallet in exchange for Coinbase. That is really interesting. So going on here, I want to talk a little bit about Bitmain. As we've talked about in the past, Bitmain has had some criticism and worries tied to it towards its IPO filing or potential IPO filing. Well, no matter if those fears have been completely tethered away in regards to its large exposure to Bitcoin Cash, we have the Bitmain official IPO filing processed through at the moment, and it looks like the IPO could be coming in the near future, where it actually hits onto the major exchanges in Hong Kong. Now, I want to emphasize really why I'm bringing this up. I think this is very, very interesting because this is going to give us a very good reading on what generally Asian investors, and not only just Asian investors, generally investors across the world, because most investors in the US can invest in any market. I think it's going to give us a very, very good perspective for once. And I think the history of cryptocurrencies and traditional markets, where we can see what traditional investors and institutions are viewing cryptocurrencies at the moment. What's the current sentiment? And the reason I say that is because Bitmain is one of the largest actual established companies outside of Coinbase and a few other exchanges tied to cryptocurrencies. Period. It really is one of the few companies, one of the few big central entities. And we can't deny that, as much as some of us like Bitmain, some of us don't like Bitmain. Again, we have to see what institutions are thinking of Bitmain, and that gives us a really good sentiment indicator. So I'm going to be keeping an eye on that once that actually launches. We'll take a look at that from time to time when either we dive through crypto markets or traditional markets, just to keep an eye on the momentum and the excitement that we see in traditional markets. Again, it's going to be, I think, more of a substantial sentiment indicator rather than what we saw, like I was talking about earlier, with some of the companies that would add blockchain to their name or invest in a small blockchain project. Again, that's where we're really going to have to watch things, is see how the market responds to Bitmain. Going on here, let's go ahead and dive into traditional markets, because there's a very, very big decision going on today, and that is going to be the FOMC meeting that's coming on later on. So again, this is where we're going to be getting some determination from the Federal Reserve on potential rate hikes, and also more of a roadmap towards what we're expecting to see in future rate hikes as well, going into the later part of 2018, 2019, and 2020. So as we go along this chart here, we can see that there are some estimates here towards potential rate hikes, generally going along the line that we're going to be seeing anywhere from around 3 to 4% going into 2019 or 2020 over the next few years. The reason this is very important is, again, we talk about monetary policy and its effect on traditional equities. And I've been talking, again, you guys know I've been, as of 2018, I've been relatively bearish or worried in markets. Again, I'm not saying to just go short the market, panic sell, and get completely out of equities at the moment, but we're towards the later part of this cycle. And as we continue to raise interest rates, it's, rather than providing quantitative easing on the market, it's quantitative tightening. We're tightening monetary policy on the market. We're hoping that the stronger economy that we're going into right now, with the lower jobs numbers and things like that, that we're going to hopefully hold against these higher interest rates, that capital constraints won't have such a constraint on markets. But again, as we've seen historically, as we've been in a boom and bust market, that as we rise interest rates and we step towards this later part, even though the U.S. economy has been holding stronger towards equities, that there is more concern. So again, very important to watch. This is going to be at 2 o'clock in the afternoon. I recommend you guys watch it. If not, catch up on the news. If it's too late by then, if you're past 2 o'clock, you guys should definitely go and look at the results there. But I want to talk about a few different things at the moment that are kind of catching my eye outside of this. The insider selling going on in the market has set for the fastest pace of insider selling since back in really nearly over a decade. So we've talked about this combination of higher institutional selling. We'll talk about what insider selling, what that means, and then also the higher amount of corporate buybacks. And we've seen this combination back in 2008. A combination of insider selling, which is people working at these respected companies selling their stock in the company itself, while there's record buybacks. Now, this has always been a pretty clear indicator, and it makes sense as to why equities are going to be moving lower from this point on, or at least roughly have a harder time making the gains that we've seen. And the reason why is because the people at these companies know very well when it's probably best to start selling shares in the company. This is why it's public information. So they're starting to exit their positions as they're using the cash on their balance sheet to keep propping up the stock. And this is why I say it's an issue. Stock buybacks used to not be that big of an issue, and they were very similar to dividends, but they started becoming using a tool. They used to be. They've started to become a tool to abuse, in a sense, a way to push up price for your equities, for your stock in this case. And I think it's a very, very concerning trend that we're seeing as people at these companies are exiting out. They're using the cash on their company's balance sheet to meet the needs of they themselves, the shareholders. And I don't think that's a very healthy trend rather than investing in the real economy. This doesn't improve anything. It doesn't generate anything real as you're spending over $1 trillion on stock buybacks and dividends this year alone in U.S. markets. So again, I think this is something to keep an eye on. Almost $450 million in daily worth of selling from these people at these companies. And that's not even covering what the hedge funds are doing. So how much are stock buybacks really propping up this market? I think it's an important thing to keep in mind. And this also comes at a time as well when we talk about stock buybacks of corporate debt. We haven't reached these levels since back again in 2008. This is something we've talked about before, and it's quite self-explanatory, guys. We're reaching a level where for non-financial corporations, just general corporations, we're reaching the same levels of debt that we saw back in 2008 as well as 2000 during the dot-com bubble comparative to GDP. This is a very important indicator because as debt is growing as a percentage of GDP, this is usually signaling the amount of capital, the credit that people are using to keep business going, the amount of borrowed money that they're utilizing. We can see that 45% over the past few years has been a historic level where we tend to see corrections here. Now, I want to actually see the longer term chart here if we have the data, actually see if this has been a historical trend past 2000. But at the moment, this is, again, third time's a charm in this case in regards to the fact that we might potentially start seeing corporate debt come down. And when borrowing money, again, if interest rates get too high, if money or credit in this case gets too expensive, you could see those corporate levels of debt start to drop, economic stimulus slow down, and then potentially a recession. That's kind of the ballpark here of understanding monetary policy. Again, we've been on a great run up over the past few years, so it wouldn't be that hard to believe. So again, keep an eye on that. And they also talked about here on, this is one of my nice sites I like to go on, LMTR, but they talked a little bit about Ray Dalio's book here on big debt crises, or a template for understanding big debt crises. He's one of the few people, guys, that I actually trust in the financial space, and he's a well-respected person in finance. He's built billions under his net worth, and he's led at Bridgewater. But the big thing here that I wanted to share with you all is that he has launched this book. This isn't paid or sponsored or anything, but he launched this really massive 300-page report that a lot of people over at Bridgewater, I think, work towards creating, and it gives you a huge template for understanding all the currency and debt crises that we've seen across the board. So if you guys actually sign up for the newsletter thing there, you get a free copy of the book. I did it. It's like 300 pages of awesome material if you're a big data junkie like I am. And hopefully as well, I don't expect anyone to be, but if anyone knows how to get in contact with Ray Dalio, we actually are hoping to get him on the podcast. I'd love to have him on and just have a conversation with him. He's very, very intelligent. And again, really recommend you watch some of his interviews. There's a really cool one that he did on Bloomberg as of recent about Turkey and Argentina and the emerging market crises that we're currently seeing. And also as well, in the description and the video, I'll leave down a copy of the Daily Shot Brief. This was a really cool report. I think you guys should look through on this website and look at the one that they recently did for today. But we don't have time for that to look through the video. Today we're going to be taking a look at equities at the end of this video. The big thing I want to emphasize, guys, more than anything that's actually causing me a little bit of concern is the home builder market, the real estate market. Now, equities, for the most part, and we'll take a look at some of the positives in this market, is really in the tech sector. But at the moment, we're starting to see really a pickup in momentum to the downside on U.S. home builders. This is a big index that we take a look at when we're analyzing, new home building, for example. And again, when there's a decline in sales for new homes, you can bet as well in this market, whereas new homes are cheaper. Older homes as well are going to be dropping in regards to their sales at a faster pace. And I can tell you guys, you can get a general trend of this outside of the technical side. There's homes everywhere that are struggling, at least in my area. And my area has done quite well during the recovery from the recession. That we're starting to see way too many homes, a glut in supply, and we're starting to see as well that those homes are not selling. So I think this is sending signals and shockwaves into the home builders ETF, the home builders index here. We're starting to see a pickup in sell-off. And we saw a very similar trend back here in 2015 that picked up into a very, very big drop, pretty much a drop in 50% of its value almost. We were getting towards probably one of the biggest sharp declines that we had seen since all the way back in 2008. And we'll take a look here on the monthly, and I want to talk about this as a macro trend. Notice how this point of support here at 25 points here on the index was a key level both in the continued rally into 2005, but also as support in 2006 and 2007. And now this is acting as resistance here. So unless we can on the monthly see support at the 200, 150 or 100 SMA, if we can't get that on the monthly, that is going to be very, very concerning for the housing market. So either way, whether or not we get a bigger downturn in the long term or just a short-term correction, I think you could see this come down to some of these monthly moving averages, especially as the momentum picks up. And because of that, I think this is going to be a big way down on the market. The housing market has been a huge plus for the U.S. economy at the moment. There's been decent amount of growth in the real estate market. Not a serious recovery in my opinion, but prices have definitely gone up and people are buying homes, at least in some of the areas that I focused in. The question is, can that momentum keep up? Now, the positive thing I want to say on the market, as always, I think it's tended that a lot of the channels in the space that cover cryptocurrencies and traditional markets tend to have sometimes a negative tone on things all the time. I will be fair, guys. When it comes to equity markets, I got to give it to the NASDAQ. The NASDAQ has continued to hold on the 50-day as we've been looking for a potential downturn. Every time we have buyers coming in, again, a lot of this has to do with stock buybacks. That cannot be denied, guys. But as we enter into a blackout period on stock buybacks, going into October, if this continues to hold like it is and even test towards higher levels, that does show some signals of confidence in the tech sector for U.S. equities. And again, the thing to keep in mind here is, guys, as well, is that as we start to see a crisis in emerging markets, a lot of that international capital can flow into the United States and U.S. indices. This has already been happening for the past few years, but as money moves out of China, as we can take a look across the board, for example, the Shanghai Composite, we can see that China equities have been on quite a decline here. They got a recent rebound here in September and might make some gains here for quite some time, but China's market has been on the downturn. You can take a look at the Hong Kong index, for example. We can see that most markets have generally been moving down in some of the more well-established emerging markets, but also in some of the smaller ones like Argentina and Venezuela. Again, there's been the currency crises, the geopolitical issues that we've talked about. That money has to flow somewhere. It doesn't always have to be invested, but it most likely is going to go into something that's going to grow that money and fight against inflation. And we see that a lot of that money is flowing into U.S. markets. There's kind of the big trifecta here, the fact that we've had really low monetary policy for quite some time, the fact that the U.S. is looking more optimistic comparative to emerging markets, etc. There's a lot of things going for U.S. equities and the stock buybacks as well. So again, got to be fair here. Very, very interesting to look at the moment. So again, I wouldn't be exactly screaming to get bearish on equities at the moment, but again, to keep not worried in a sense, keep wary of the fact that we are at the later part of this cycle most likely, and to have precautions set in stone. So anyways, that's it for the video, everyone. A lot of material that we went through today on the daily update. Let me know what you guys think about what we talked about. What did you guys think about traditional markets? What do you guys think about what's going on in the cryptocurrency space at the moment? What do you think the Fed's going to do? And also, what do you think about the lighting? Does it look good? I've been kind of toying around with it, but I'd like to get your opinion on it, and let me know what you think down in the comments down below. But until the next video, thank you all so much for watching, and I'll see you all in the next one. Stay tuned.